Hey, my name is Tucker Kraus, and welcome back to my channel. In today's video, we're finally going to be taking a look at NextGen Energy and seeing, even with these run-up prices, if it's still a buy, and chance by the time you're seeing this, I wouldn't be surprised if its price is even higher. And that's because I'm sure you've seen the news recently. Well, not news, but the spot price has launched to $60, which is, to be honest, I used to think $60 to $80 would kind of be the high for this one. That's when we start selling out. But if anything, it seems like we're just getting started at $60. So without further ado, NextGen Energy trades with the ticker NXE with a price per share of $5.72 with a market cap of $2.75 billion. And of course, like I said, spot price has rocketed. So of course, the equities have as well, and so their price per pound's a little bit higher at $8.16, and they of course trade on New York Stock Exchange and the Toronto Stock Exchange. So, as of March 9th, we can see here that they are trading just below their September highs. Most companies are trading this range around their September highs, so maybe once we break this resistance of the September highs, we will rocket higher, because, of course, this most recent leg up and price action that we saw in spot price is because we've seen recently that Russia and the US, of course, with the invasion of Ukraine, a whole bunch of sanctions being levied on Russia, and it's now being rumored that uranium is going to be one of those things that is going to be sanctioned. And Russia actually does 35% of global uranium enrichment, and of course uranium has to be enriched to be used in reactors for instead of just going from the mine straight to the reactor. It doesn't work like that. And so if we're losing a whole bunch of that, that of course makes the supply deficit worse if we're losing 35% of enrichment production. So of course, if that doesn't actually come through and that's not actually sanctioned, we could see the spot price come collapsing back down along with the equities. In the short term, though, of course, long-term story is still there. But now let's move into a little bit more about the company itself, not just the stock and the surrounding macro. Alright, so this is just a cool slide, I kind of thought. It's not necessarily about the company specifically, but it just shows how early we are on in this commodity bull market. Tesla, $1 trillion market cap. All of uranium, $30 billion, though of course it's a little higher now and Tesla's a little lower now, and the amount of CO2 removed compared to EVs, well, it's insane. And so, of course, that just shows a bit of the ESG capability here of uranium. That's, of course, another big thing with it. Alright, so going through just the deposit itself, we can see it's a lot more shallow than a lot of these other ones, and so that of course is a good thing. That makes it cheaper to get to, and compared to RRR, which their kind of big thing at fission uranium is how shallow it is. They're not under a lake, which is definitely a big issue with fission uranium, is they have to build under a lake, which of course makes it more complicated. So they've got some really good technicals here. Well, not technical analysis, but I should say, technicals for the mine itself and deposit itself. So what did they do in 2021? Well, they published a feasibility study, which is where all the numbers are going to come from for the DCF. That's a good thing since a PEA is honestly not all that accurate. A PFS starts to get a little bit more accurate, but still going to be pretty far off. A feasibility study is actually going to be pretty close to realistic. And so, right, the PEA, PFS, and now FS, those all are like where you get the OPEX, CAPEX, and they get more and more accurate as you go on. And so they also publish an ESG report, and they're working on getting more licensing and all that kind of stuff throughout 2021, more drilling, all that good stuff. And so if we keep moving down here, we can see they plan to get a sustainability report out, an EIS out, get more of the licensing done, all that good stuff. So hopefully this means they can start building a mine pretty soon. Well, this cut might be a little jarring because I forgot to actually record this in my first go-through. Sorry about that. Capital structure. This is very important. Good thing I remember to come back and cover it afterwards. Looks actually really good here with NextGen. 5% insider ownership for a company this large especially is very high. I really like to see that. Shows the management's confident. And relative, their options and conversion and all that relative to shares issued is really good. So capital structure, great here in NextGen. And relative to market cap, not a ton of shares outstanding. All good here in capital structure with NextGen. So, of course, the deposit, Arrow, this is, of course, what they're known for, is their absolutely massive deposit. That's why their market cap is so high. 337.4 million pounds in the ground at a pretty high grade of 1.965%. Now, I should note they're only going to be producing 238.7 million pounds of that, with plenty of extra exploration projects, and, of course, a 51% holding of ISO energy. So, of course, this isn't everything they have. And plus, yeah, after they produce, still another 100 million pounds in the ground. So, that means after they produce this, which is all the DCF valuation, well, there's still a lot more to go with them. So one thing I don't like here of everything here in the deposit is a very high royalty of 7.2%. Not a big fan of that, but grade still pretty good, especially for how massive this deposit is. And then very high capex, but makes sense with how many pounds in the ground there are, of about 1.3 million in initial capex are about 1.73 billion total, with about 430 million of that being sustaining and all that good stuff. Not sure why ramp up is here. I think that's just a copy and paste from an older video, so let's get rid of that. Now, we can keep moving on here to the OPEX. Very low here at only $7.58 per pound. That's, of course, a good thing. And construction 4 years, that's on the higher side. But again, massive deposit. And they'll be producing for 11 years. And so the DCF is going to assume 2023 construction. And I normally do 2024, but at this rate, 2023 isn't unlikely. I wasn't expecting uranium to move so fast. So let's get into the fair value itself. So I normally do 60, 80... current price assumption and current spot price, but now current spot price is $60, so I've decided to throw a $100 U here as well. So at current spot price, $60, they're actually just about fair value, so at $62.05 uranium spot price, they are fair value, so that's really good, since even at the February lows, a lot of these companies at $80 U were rating as overvalued, and so this company shot up a whole bunch, and is still rating as undervalued significantly at $80 U, so relative to a lot of the other companies, really good here, showing significantly more upside at $100, of course, with a little over a double here relative to less than a double in spot price. So, of course, that shows a lot more leverage compared to just the spot price itself. And I should also note is if we see $100 U, I think the company's going to do more than just 115% to the upside, because these numbers are quite conservative with 50% capex and OPEX inflation with a 10% discount rate. That does mean realistically their fair value is actually higher than this at each of these prices. And, of course, they'll overshoot their fair value in a crazy commodity bull market. So overall, looks really good here with NexGen, even if their price per pound is on the high side, but fair value is more important, so this makes up for it. Well, and just remember, of course, none of this is financial advice, just for entertainment purposes only, though overall, NexGen seems to be doing pretty good here. I hope you enjoyed the video, all that good stuff. Thanks for watching. Make sure to subscribe, all that good stuff. I said that twice. Good job, me. Thanks for watching, and I'll see you next time.